I'm expecting, I'm anticipating. I'm already in the future waiting for price to get to where I am. You're going to get to that point too. You're not going to be surprised. You're not going to be gasping in panic and having anxiety attacks because you're watching real-time price action. You want to anticipate how price is going to deliver based on the concepts that I'm sharing with you. And over time, you're going to get better at this than you probably expect to. And that's going to be a wonderful testimony that I can't wait to hear from you when you share it. So let's get into the details here and give you some practical things to look for. Obviously, I gave you the 4069.75 low in the London session, near the end of the London session on Friday, before New York session even began. And I'll show you that all that detail in the analysis in the charts on Sunday. So that way I'll show you where that price level came from and why I felt confident in sharing it with you. And then now I'm going to talk about the 41.025 level, 41.01.5 level, the 41.04 level, and the 41.050. That is a layered area of liquidity. Above what? If you look at the 130 highs, and in your chart, it's going to be real close to where I have, where it says high of day. Go down a little bit to there's a little red line and go to the right end of that red line segment. That high right there at 1330, which is 1:30 New York local time. That high is relatively equal to that of the high that was formed between 10 o'clock and 10:30 in the left-hand side where it says buy side liquidity. The fact that the 1330 high running above 4100 breached the high that was formed between 10 o'clock and 10:30 on the left-hand side where I have buy side liquidity, that in itself is too shallow of a run. Notice how it just went up there a couple times at around 130, ahead of 130. Just a few candles went up there, and then we moved from that high down to around 40.82 at 2:30 in the afternoon. See that? When that retraced, I had a stop loss on my one singular account or one singular contract in my account, and it went to 40.84.50. That was where my stop loss was. And I was willing to let it come all the way back down there or see my limit order filled at 41.01.50. Now, the high of the day, right around that 130 high, was exactly 41.01.50. But the difference between the bid and the ask wasn't allowing that limit order to be filled. So the lines portion of the trade that was taken and accumulated around that the largest rectangle that's pink between 12 o'clock and 1 o'clock, I was going long in all that, using that fair value gap high as support, expecting it to rally, and then using the longest blue rectangle in the left-hand side of the chart between 11 o'clock and 13 or 1 o'clock, waiting for that to see price rip through that and attack the buy side liquidity resting around 40.95. And it dug into that and then reached up above the highs that was formed between 10 o'clock and 10:30 in the morning. That shallow little run and that deep retracement all the way back down into 40.82 and a half or so, whatever it was. Basically the 14:30 low, 2:30 low in New York local time. I felt that we would potentially run that 4100 a little bit more meaningfully because it's Friday, because they left those highs, because the bump above it at 130, which is the 1330 time at the bottom of that chart, it only went above it a little bit. So because that's a high of day, and it was only ran out shallow little bit above the previous high. It was formed at 10:30. That means there's going to be what? Traders feeling very confident that it's not going to go up there. So what's going to be residing above that? Buy side. More buy side. And it's going to be above the high that forms at 13:30 or 1:30 in the afternoon, New York local time. So we would be expecting it to go above that. So now fast forward to 14:30 in time at the bottom of the chart. That's 1:30 New York local time. That low at 14:30, which is around the price level of almost 40.82.00. The high prior to that low, which forms between 1400 and 1430 per time. So 1 o'clock and 1:30. I'm sorry, 2 o'clock and 2:30. There's a short-term high that formed around 4090 price level. This would have been so much better if you just would have done this on a live stream. I know, I hear you bitching. This is better for you to learn this way. I'm putting you in the chart instead of just casually Netflix watching me. That price leg from 4090 or thereabouts between 2 o'clock and 2:30, which is represented in this chart by 1400 to 1430 in the time axis at the bottom of the chart. So price level 4090 high down to the low at 1430 or 2:30 in time at 4082. I think it's a quarter there as the price low. If you take your Fibonacci on your charts, and this part may not be applicable for you, but you want to write this down in your journal because you want to test this now. That low up to that short-term high, so the low at 14:30 time or 2:30 to the high formed between 2 o'clock and 2:30, if you take your fib and anchor it to the low all the way up to that high and use your fib projections, and what projections are they? I've already shared it multiple times on the Twitter, and I've also shared it multiple times on my videos. You're going to be placing it at the low at 4082.00, and that candle's low is going to be exactly at 14:31. Okay, so 2:31 New York local time. And you're going to drag the Fibonacci up to the high on the 216 high, or in this candle, or in this chart, it would be 14:16 candle. And it would be anchored to the price level exactly at 4090.75. In your Fibonacci, you're going to have settings set to negative 0.5, negative 1, negative 1.5. And on that price run, from that low up to the high, you're measuring expansion. And you want to see standard deviation from that price leg. I'm going to tell you why I'm picking that, but just for now, do what I'm telling you to do and stop worrying about anything else. The negative 1.5 level is the only standard deviation that is above, or the very first one, above the relative equal highs to the left. Notice that? At 1:30, which would be represented by 13:30 on the time axis at the bottom of the chart, those highs relative to the highs formed between 10 o'clock and 10:30 are relatively equal. So the standard deviation between the 2:30 and 2 o'clock high in the range I just gave you on the chart, don't worry, you'll get it. I'm gonna send you a screenshot after I'm done this, and I probably shouldn't have said that because now you're gonna get lazy and say, fuck it, I'm just gonna not do it, and I'll look at what you share on Twitter. The first standard deviation above those relative equal highs, if we're measuring standard deviation from the low at 2:30 to the high at 2 o'clock, comes in at negative 1.5. Notice that. The price level for that standard deviation, negative 1.5, comes in exactly at 4104.00. Notice that? When I was watching and talking to everyone live streaming yesterday in the last hour of trading, I was talking about how I wanted to see those highs ran out and the buy side above that be purged. I wanted to see price go to 41.02 and a half. And then I said I wanted to see 41.04 or 41.05. And if it was to get really animated, I'd like to see it rip up into 41.09. The reason why I said 41.04 was because of that price leg and that expansion using standard deviation. It's not cherry picked. I'm going to explain the logic. But for now, just have that on your chart, okay? Now, if we go back to the low, you're going to start another Fibonacci overlay. So your tool for Fibonacci, you're going to take that and you're going to anchor it to the low at 12.16. Okay, at 12.16, that candle, that low, you're going to anchor your Fibonacci to that. And if you look to the left of that low, the high that forms inside of that fair value gap, the candle is at 12:07 or 7 minutes after 12 noon. The high of that candle is 4080.50. The low that you're anchored to on the 12.16 candle, the low is 4072.25. The first standard deviation above that relative equal high, if you're anchoring from that swing I just told you to anchor to, the first standard deviation above the morning session high between 10 o'clock and 10:30 comes in at -2.5. If you don't have your Fibonacci settings to have that, you just add it, and the price comes in at 4101.25. Now, I felt that we could potentially sweep above that because it's standard operating procedure to see it expand a little bit past it. So that's why I was calling 4101.50. And that's also the reason why my fill wasn't activated, because of the difference between the bid and the ask. So my limit order that was sitting and residing at 4101.50, it printed that price, but it didn't offer me the exit. So it went there, it had two candles, it printed it,